TLT. Is it pausing at the bottom or just catching its breath for a deeper dive? Welcome to Daily Market Waves, your daily pulse on the market where every candle has a story and every wave has purpose. Today we unpack and latest moves with precision. Volatility. Is it time to start forming a bottom? The dollar. Rally on pause, or just the calm before the surge. Yields, a classic tug-of-war. Natural gas, the critical line draws closer. Gold, is bearish momentum quietly building? Silver, one more higher high in the cards. Special feature, uranium stocks. The future may be bright, but do the candles agree? Plus, multi-angle analysis of SP 500, Nasdaq, and sectors, with a spotlight on technology. And huge thank you to all our loyal and new subscribers. Your support is fueling our rapid climb towards 10,000. And we start with volatility as usual. This is the candle closure today, and while it is somewhat bearish and very strong, I would say, for the index, S&P 500 index, the futures are not as bearish as I would like to see them. And this is the small green candle, which is potentially a harami, a bullish harami. If this candle gets a confirmation in the next day or two, this would be quite a reversal. And I would say that harami often allows a lower low before being confirmed. And just to say that right now, volatility here, the index itself, crossed below the 100 and 200 days moving averages, which technically it's a strong signal. But let's see who is winning right now, whether index or the futures that usually close later and they know a little more. Now let's have a look at the dollar index. What we are seeing here is the potential for continued rally. First of all, I'd like to say that the dollar index started the day with a very strong bearish move, and I at some point already thought that this might be over for the rally. However, bulls pulled it up, and at the end it closed with a somewhat bearish but not so candles. Also, it's bearish but closer to neutral. And right now we need a confirmation for either path here. But I would like to say that the support lines are working pretty well here. On the 5-day candle that is closing tomorrow, we still have a very good chance for dollar to form a bottom. And if we look at this frame, at this particular formation, this is a typical ladder bottom that we already discussed multiple times on different instruments. And if dollar closes the day tomorrow as this one at this level or a little higher, this would be a reversal, technically a reversal confirmation. And the monthly frame, so far we are monitoring it, it needs to close above 105.42 in order to avoid a bearish closure. That's for dollar. Now let's have a look at bonds and the story behind the candles. So today yields started with very bearish move, and again I was thinking that it's gonna be a reversal. However, by the end of the day, everything became normal. Yields pulled up, and technically the 30, 20, and 10-year yields formed just a neutral candles. Most likely it's just a pause before moving higher. And I would like to say that for 30 years, for example, the 100 days moving average is behind right now. Somewhat similar happened with the 2 and 5-year yields. Candles were bearish, however, they transformed into somewhat neutral slightly bearish candles. Now they are looking for confirmation. That's the perspective, the candles perspective. Now let's have a look at the 20-year yield Elliott Wave chart. So far, it is the same as we outlined it last week. The wave right now is impulsive, and there is a very good chance that we might see higher highs very soon. That's the perspective for the yields from candles and Elliott waves. Now let's have a look at TLT. Well, as I said yesterday, if the candle closes below the green candle, it will be a bearish reversal on the 2-day frame. So it happened. And not only that, we can see that the candle moved below the blue line, which is technically the 100 days moving average, and we can see it also here. Well, and what I'm seeing here is a clear and potentially confirmed double top. This is what I am talking about. This is the neckline, and the candle closed below the neckline. And now, with this perspective, I would say we would be looking for 87 level approximately. This would be target for the next move. And if you remember, we whispered get out on March 20th when we saw this big candle. So far, everything is bearish here. Today's daily in neck candle is technically a bearish continuation one, and I would like to say that tomorrow, probably the first thing, we will see an 8x20 EMA bearish cross. Speaking about the monthly frame, it's getting worse for the bulls, because right now they need to lift it approximately 3% in the remaining 3 trading days. Let's see if it's possible. Now, speaking about the Elliott Wave chart, this is the one that we've been tracking since the beginning of March. Practically it's unchanged. We just add the little components here and there. So far, it's already in our target area, but I would say that it's probably gonna go a little lower here, at least to 87. And if we just look back for this one, this totally makes sense, because this estimate by double top is aligned very well with this particular one. And whether this is going to be wave 2 or wave C of the purple scenario or wave 3 of the red scenario, it's not clear yet. So the wave so far is impulsive wave down, and it fits both scenarios. So that's the perspective, and I would like to say that either purple path or red path will bring TLT to lower low below 84, 85. That's a very high chance at this moment. So that's all about the bond market that I'd like to mention today. And now let's move to our commodities section, and we start with natural gas. So what we are seeing here is technically a bearish closure. We would expect lower lows, lower low. However, we might see a support here. But both candles, like daily candle and 3-day candles, closed with bearish candles, and the chances for lower low are higher. Whether it forms another red candle, it's still a question, but nevertheless, we are expecting lower lows. And speaking about the weekly frame, it is not decided yet, and in order to form a bearish top, and a tower, technically it would be a tower top, or form a bearish continuation here, natural gas needs to close below 3.81 on Friday. If it doesn't, well, it's gonna be a rising 3 methods or somewhat similar candle formation, but we'll talk about it when we see it. Speaking about Elliott waves, this is what I think is going to happen right now. So this is potential. We've been tracking this for a while, and I would like to zoom in and have a look at microwaves here. So what I think it's happening right now is that this has been a triangle. So this is the triangle. Okay, let me change the color, make it smaller. So this is potentially a triangle, and I would see it as in 1, 2, oh no, wrong one. It's not 1, 2, 3, it's A, B, C, D, E. Oh, I don't have it handy anyway. So that's the wave 4 here. It's A, B, C, D, E formation, and then we have a clean impulse down, and this is potentially the end of a bigger wave that we are discussing. So, and this is end of wave 5, 4, and C. And now let's move on to the bigger chart and have a look from that perspective. So that's potentially the end of the wave. And if we see a very strong reversal here, we would be looking for an impulse. Right now, the wave is very young, and we need to see a better structure in order to analyze it. But nevertheless, it's very close to this level, critical level. If it's crossed, then all these counts would be invalidated, and we would need to reevaluate not only the short term but also mid and possibly even the long term for natural gas. So far, this is the chart, and the perspective right now is to move and start wave 5, which would end somewhere here around 5 or even higher. Let's see how natural gas behaves in the next couple of days. I think that the weekly closure would be very critical. That's about natural gas. Now let's take a look at gold. So what is happening here? So this is what I was afraid of, and this is what happened. So first of all, let's listen to the story of the candles on the daily frame. Yesterday it was the candle, the red candle, which was somewhat neutral, and today gold had a chance to technically form a bottom here. However, it was pushed down, and it formed only a neutral candle, which is technically a failure. So it needed to close above the red line today, but failed. So right now the odds are bearish on the daily frame, and just to confirm this one, 3-day frame closed today also, and this was the line that I charted here between the bearish and bullish closure. So it fell below and formed a dark cloud cover technically, which is, or Harami candle, bearish Harami, which is a bearish candle, and now we have a very significant risk of moving lower. Speaking about the weekly frame, so far it is bullish. Let's see how it closes in just 2 days. That's gold candles. Speaking about Elliott waves, it's even more concerning right now because we have multiple potential paths being developed. First of all, it could be a bigger wave 4. So we have a wave A, B, and potentially wave C. And this is what I'm talking about, this A, B, C. And this is for the green one. This would be for green one. Yeah, so potentially wave A, B, C of wave 4. That's one perspective. Another perspective, that gold right now is forming a flag. So if this could be a case for a much stronger move downwards, especially if this is wave A1 or this is wave 2 or B, maybe another one, another swing higher for the flag, and then we see wave 3 or C moving down. That's the red path perspective. Or I think the worst case scenario would be if gold makes an all-time high, a new all-time high, because it would be somewhat possible at an ending diagonal. And I'm talking about this one, a 1, 2, potentially 3 here, 4, possibly 5. This would be an ending diagonal in this for this possibility, and after an ending diagonal we will see a very strong move down. That's another perspective that is right now on the table. This is all because this wave of this bottom on March 21st has been corrective. So let's see how gold decides to make it, but I would say that right now it's in a very tough situation, so it needs to resolve towards at least the lower low in order to start a new impulse up. And if you look at the bigger frame, this is what I've been talking about for a while. So if gold makes a move below 2941.3, this would be a very damaging move, and it would technically confirm an ending diagonal that started way back in November, a non-overlapping diagonal, and that would be wave 3 waiver. This would be a very complex wave with multiple overlaps, and this is another three wave wave. So that's the perspective. And if we look at at the candles for GOD Trust, so far the closure was neutral today. Neither daily nor 2-day frame confirmed or rejected the bearish move that happened before. And I'd like to say this one, I'm talking about the candle that was formed yesterday, a very strong bearish one. If it is confirmed in the next 5 days, it will be a reversal on that frame. So far, speaking about the monthly, so far it is looking bullish, but if gold loses about 2% in the next 3 days, it could be a bearish transformation. So that's gold. Now let's talk about silver once we are with precious metals. So silver is quite different. The silver is quite different. So first of all, I'd like to say that silver formed a tower bottom here, a fairly clean one, and I would say that we would expect silver to move higher, whether immediately or after a little pause, let's say 1-2 days, and then a move higher. So that's the perspective. And if we look at the 2-day frame, it's also somewhat bullish, however not entirely. So let's see how silver resolves this puzzle. Speaking about Elliott waves, it's been way more decisive right now, and because of this move yesterday. So this made a big overlap, and right now this wave is corrective. And now we have a fairly clean perspective. So either silver completes this wave as an ending diagonal, it makes a higher high here. The question is whether this higher high would be below this 34.863. In this case, we would consider it as a red path. But if it makes it higher, we might consider a blue path here, or even a green one, which is an even bigger ending diagonal. So that are the perspectives for the current situation for silver, and I'm not seeing any impulsive waves here. So that's the perspective. The key element here is the cross above this line. If it doesn't, well, it opens much stronger bearish perspectives. Speaking about the SLV trust after bearish candle, strong bearish candle on the 5-day. We are seeing a bounce, but it might resolve down or up. That's the question. So far, the daily candle is bullish, but I cannot say it's excessively bullish. The chances, though, however, are significant for a move higher. So that's this the silver and the gold. What we are seeing, silver has better perspective to move to all-time high. Gold is very questionable at this moment, but we shall see. I think that the weekly and immediately after on Monday, the monthly closures will be key for the next evaluation, next assessment. And this, our special feature of the day, uranium technical analysis of several stocks that track uranium, and we'll start with the bullish with the candle story for URA, the Global X Uranium ETF. So what we are seeing here is a very strong bearish closure today, a very strong, extremely. We have a bearish combination of two candles with a doji and a strong move bearish below the two support levels. On the 2-day frame, a somewhat similar formation, so it's a bearish candle, and we are seeing multiple crosses here, which is technically 100 over 400 and 200 over 400 crosses. That's a very strong one. The weekly is shaping up bearish, but there are still 2 days. Let's see how it closes. No, not 2, 3 days. And the monthly frame so far is tracking for bearish closure, but let's see if the next 3 days can change it. Now let's have a look at energy fuels, Quad U. After a very significant bearish engulfing yesterday, we got a confirmation. Now the chances for moving lower are very significant. On a 2-day frame, we have a clean bearish engulfing, like entire bearish engulfing, which totally engulfs the previous candle, including its high and low. And if energy fuels track like this on the quarterly frame, this would be a very strong bearish closure. And I'm saying that this would be 8 by 20 EMA bearish cross on a quarterly frame, which is extremely rare formation. Thus, it is very significant. Now let's have a look at the frames, or at the Elliott waves and the other classical patterns. So what we identified here on March 14, 10 days ago, that Quad U is forming a flag, and right now it looks like the flag is complete, and this would be the target for it. 330, 302, that's the preliminary targets for now, but it is aligned well with our long-term perspectives that we discussed for a while. This is the Elliott Wave chart, and something that we are tracking since, this is our original one, since December 2023, when we said that energy fuels going towards 4.6, 2.3, so the chart practically remains the same. We heard lots of opponents saying that it would never happen. Well, it's difficult to argue with candles. This is what we do. We just transcript them. We just interpret them for everyone else. And this is right now, we are in the middle of the target, but the chances for moving lower, especially if we consider this particular formation, are fairly high. And the candles are not closing in favor of bulls, especially on the monthly and quarterly frames. Now let's have a look at Cameco Corporation. Let's start with the candles. Candles also today were quite bearish on the daily frame, and I think the two-day frame is not as bearish as the daily one, so this could be technically a continuation, but let's see how it closes the week. I'm very concerned right now. The weekly frame, as we discussed it in our previous video, which you can watch, we said that the weekly frame needs to close above 44.75. I think right now this target is moved a little higher, but let it try to do this first. If it doesn't close above this line, it will be a bearish closure with a good chance to move lower. The monthly candle so far is bearish, and speaking about the quarterly one, it's a very concerning one. So in order to reverse it, let's say in order to mitigate it first and make it less bearish, Cameco Corporation needs to rally about 8% in the remaining 4 days. But in order to make it technically bullish, it would need about 13%. Well, it's possible, but the probability is on the lower side. All right, so that's the perspective for uranium. I hope you liked it. If you do, just say so. Hit this like button, share this on different media, share with your fellow traders. And now let's move on into the stock market, and we start with the candles for US indices. So what we have for closure today is SPY, QQQ, DIA, and IWM. There is no consensus among them, I would say so. So the candle for S&P 500 is kind of neutral, although it's still bullish, and I would like to mention that it climbed and found support at 200 days moving average, which could be significant, which could be very significant. Let's see how it develops further. So far, Nasdaq is struggling to get over 200 days moving average. However, the candle is bullish and the very good chance to continue higher. Speaking about Dow Jones and Russell, I'm not sure about them at all. First of all, the candles are bearish, or for Dow Jones it's neutral bearish, for Russell it's clearly bearish harami, and the push below the 20 days EMA. That could be significant, especially if it confirms in the next couple of days. Speaking about the larger frames, I'd like to remind yesterday we had a very concerning closure on the 5-day frame. So while this formation could look bullish, it's not. It's potentially a setup for falling three methods, especially if S&P 500 and the Nasdaq or SPY and QQQ fail to close above these levels on Monday. So we will be tracking it. We'll see how it goes. So far, this is just the first day of the 5-day candle, and it's not very informative at this moment. Now I would like to show you this. This is the 10-day frame that we were tracking for a while, since technically January. And right now we are seeing that despite the green candle, it continues to move. The MACD bearish cross continues to expand, and we are not seeing any divergence on the histogram. But things are getting worse in this department. This is the 15-day frame, which is forming in 5 days, technically on Monday. If it is not reversed here, which I highly doubt, by the way, we are going to have an all-time high bearish cross on MACD on the 15-day frame. And speaking about the previous experience, especially this one in 2022, when this cross led to a loss of 27% of capitalization, well, this cross is higher, so it would be reasonable to assume that the losses could be higher either. So that's the technical perspective. Let's see whether the index is able to reverse it in the next 5 days. Now let's move on to the Elliott Wave chart. This is the chart we've been tracking for a while, and I'm looking for potential A-B structure. So this is most likely wave A of a bigger correction. This is wave B as a zigzag because I'm looking for this wave as a corrective one, because it has several overlaps, and it's very difficult to dissect this wave into an impulse. So this wave looks like impulsive for now, and this is the target. So no changes, technically the same chart as we discussed yesterday. Now speaking about Nasdaq Elliott Wave. So it's been more conclusive that the S&P 500 one, because of the structure of this wave. So this is clearly a bearish flag. The question is where it ends, whether it ends here and starts the purple wave, or it makes a higher high, and technically it would be, this is the wave, this is the target for this is 50% mark of the wave, of the length of the wave that started from the top and ended here on March 10. So the typical retrace for wave B is between 50 and 62%. Well, that's the potential target for this wave. Let's see how it completes, where it reverses, and what would be the next move. So far, this is our target. This is our chart. Now let's have a look at the sectors. I would say the picture is quite disappointing if we are looking for a major rally, because only technology sector and financial are bullish. Well, consumer discretionary too. So these three are bullish. The other ones are bearish, and this could be a big issue tomorrow. I would say that with approximately equal weight between these three and these five, we might see a tug-of-war. And the healthcare, utilities, staples, industrial, and energy are potentially bearish for tomorrow. And if I look at the larger candle, larger stocks here, so they are not clear either. Let's say if Microsoft didn't complete the reversal here, and if I look at the 2-day frame, it's technically a bearish candle, potentially leading to a reversal. Amazon is looking good, and Apple is also looking bullish. Google is solid, and Nvidia is questionable because of this Harami bearish, potential bearish Harami, and Meta is also potentially bearish. Tesla is looking good so far, and big congratulations, it's finally pushed it over 200 days moving average. However, I'd like to emphasize that this wave is not necessarily impulsive. Let's see how it develops further, and if you watched our videos, recent videos where we discussed Tesla, you might get an idea where it is heading. And I would like to say about Berkshire Hathaway, it had an epic failure today. Epic. So in order to cancel this red candle, it needed to close above the high of this candle, which is 528.96. It closed at 528.87, which is just 9 basis points below. I would say it's an epic failure, and right now the odds are bearish here. Let's see how it plays tomorrow. That would be a very interesting thing to watch. And generally, I'd like to offer a little discussion or a deep dive into a technology sector, because if we look at the previous one, we see that technology is forming a bullish candle here. My question was how healthy this rally was, and what would be the perspective. We already discussed technology sector earlier this month, and I recorded the entire video about the technology sector and multiple technical angles. And in this quick review, we just have a look at this. So this is the candles for technology sector. We are seeing the daily is bullish so far, and it's climbing higher, so no concerns here. The concerns start when we start looking at the bigger frames, and especially this is the 3-day frame, which is closing tomorrow. This is going to be a significant one for the momentum readings, and I would like to say that if so, it is this high of this candle, it's 207.08. Oh no, sorry, it's high 220.45. So if this line is 220.45, I'll mark it here. If technology closes above this line tomorrow, it will be at a bottom on the 3-day frame, which is quite significant. We will have good chances. But if it fails, it will be an epic failure, and we would be looking for lower, because the momentum on the 3-day frame wouldn't form the bullish momentum. And another thing, the technical thing that I would like to bring here is this one. We discussed it on March 15, and I recorded it. It was recorded in a video. An XLK formed a MACD bearish cross on the monthly frame, and this is a big and significant event. It's not recorded fully yet, so we still have 5 days, 22 hours for reversing it. Let's see if it happens. Let's see if it happens. But if it completes and records, this would be an all-time high. This would be the highest on the record, approximately 10% higher than the one that was recorded in December 2020. In February 2022, which led to a 35% decline. So we can estimate so that if we have this decline, it's going to be the same decline. So it's going to be about 160 for the price of XLK. But if we consider 10% on top of this, well, we might be looking for 38 something. I'm just using rough numbers. So this would be another possible target, 147. Well, that's the perspective from the MACD cross. And now if we look at the Elliott waves and the perspectives, this is potentially the wave here. If we are looking for wave A, B, C, of a bigger correction, because this wave is corrective, and I highly doubt it would have any chances to form an impulse here. So if we are looking for an ABC correction, this would be something like this. This is A, B, and C somewhere here. That's the perspective for the technology sector, which includes all major stocks. Now let's have a look at this chart. This is what we said our call on February 16. For those who listened to us, we said the technology had a good chance to fall at least 20% of the top. On February 16, we spotted this ending diagonal and saying, well, it needs a little higher. So the XLK was 240 when we made a call. Right now it's already shed 9%, but it was more at the bottom here. Maybe it will go a little higher, but the chances that it will move toward this line are fairly significant. Well, this is just the perspective. And now let's summarize. So from TLT's indecision to gold's creeping weakness, from natural gas critical moment to a potentially explosive setup in uranium, today's wave reveals more than meets the eye. At Investing Angles, we don't just follow the charts. We decode the signals before the headlines catch up. What's your take? Is the market setting up for a shift or doubling down on current trends? Let us know in the comments. Share this video with your fellow traders. Smash that like button. Subscribe and hit the bell so you're never caught off guard. And don't forget, even our free reader plan at Investing Angles gives you access to powerful setups and inclusive insights. Until next time, stay sharp, trade smart, and as always, happy trading.